Hello, 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 everyone. Mike Arnold here, co-founder Path Trading Partners, along with Bob Iacchino. Let's see if we can get through this today on my backup computer. So, some technology challenges. Good morning, Jake. Good morning, Patrick. Walk us back on the rug pull. Yeah, markets are going up. Not yet to the target area. Grand rising, Christoph. Money's to be made this week. I had Tesla calls, sold them at the close. Sold them at close for SPY puts. Not at the target area yet. So we'll see. Tesla earnings tomorrow after the close, remember. Morning, Gary. Waka's closed his longs and gone short. Martinez, good morning. Where else do we sit? Gary's up before the open. Good. Market is healthy. Morning. Morning all. Good morning, Path Trading Partners. So, a little problem with not turning on. And then I tried to start the live stream and it's like, unknown error. Though this is on the other computer. Unknown error. Live stream won't start. Don't you love the unknown error? You're telling me there's an error that's unknown, which is fantabulous. So, Red Book came out a little bit ago. Lower than previous. Again, these are minor. Industrial production comes out in about 9 minutes. So going to keep an eye to see if that's in contraction. Somebody remind me in 8 minutes now to check in on it. Then we got housing. Then we got after the close, Fed's cash and carry is speaking. Another very light day. Stock market map so far, a sea of green still. A sea of green. Is the bottom end, you see, sectors are up even pre-market. Still 95% on that 75 basis point. I mean, that's, unless we see something major, that's baked in. What I'm keeping an eye on, the reason I'm showing this, yes, we are still negative gamma, but the zero gamma is dropping. 38.68. Why am I paying attention to that? Because if the rally does continue, especially closing in on those levels, you have negative gamma dwindling, and above those, you get positive gamma. What's positive gamma? Dampening effect. So then hedging, you're selling into the rally. So not only does the rally get long in the tooth, but to hedge, again, the market makers or dealers with large gamma positions will sell into the rally for hedging purposes. Fear and greed. Back to fear. Fear no more. We had the giant squid releasing earnings this morning. A beat and a big gap up. And yes, that is a daily double bottom. Some key targets in front of the first stop level, though. Lockheed Martin beat on EPS, but missed on missed on revenue, beat on EPS. And I have to catch up on the other ones this morning. So that's where it sits. And look at this. I can't even expand it too much. Expanded. All right. So where are we sitting with all this? Yeah. I have really bad luck with computers overall. And this isn't recently. It's, I'll take it in the computer shop and they'll be literally like, we haven't seen this before on this model. And by the computer shop, since I've been Mac based for years, Apple support loves me. I always own the support contracts. So daily cycles getting to the top area doesn't mean this has to be done yet, but I'm on more heightened alert over the next couple days for a rollover pattern. Also closing in on the 87.5 to 100 level. That's my first key target area. Also, The harmonics, this to the daily pausing bar. So from the low on the last Thursday to the high on Friday. If I drop down here, we see we hit that first level overnight. Little pullback to the 1 hour rotation zone. Rotation higher at this point. My pullback level, if we have some weakness into the open, 37.54 roughly to 37.62 with the rising rotation zone. That's my support zone. We break down below that. I am bumping up this level just a bit to the emotional candle close at 3 a.m. Central with the bottom of the 1 hour rotation zone 37.29. So this is what I'm paying attention to on the futures this morning. Expecting a push to at least 37.80.25 to hit the probabilities. Then above that to fine-tune the probabilities. Remember, anywhere between 87.5 and 100 is our probability zone. And we have a substantial volume up here. And we're running above thing. Also remember the prior breakdown zone is just above this harmonic 37.62. So I will use intraday harmonics to really fine-tune this level, but 37.91 to 3800 is my next target area, and above that the declining 200 simple. So that's what I will be targeting on the push higher today. Might get a pause going into this and that's not necessarily today. If we get the pause and the pullback move with 4 hour cycles topping, and I'm more so watching for a slight pullback with sideways correction if we have some weaker market internals. The NASDAQ got that 4 hour close above the 62.5. NASDAQ little tighter, had that reaction using the same thing from Thursday's lows to Friday's highs. 11,350, got that little pause here overnight right there. Pullback 1 hour rotation zone. So for my key levels going into this morning, prior resistance becoming support, rising 1 hour rotation zone, 11,331, 11,332. And then I'm raising this level to the bottom of the rotation zone and the key emotional candle close support overnight, 11,259. Next targets, 11,418, 11,443 to the upside. Let's just jump. Let me jump to the VIX real quick. VIX, we do have a mini potential double bottom. All right. So we'll tip into more choppy with a bearish bias if we start getting a 1 hour close above 31.38. We'll pay attention if we break that level. Then the targets, 31.72, 31.89, 32.06. We start getting VIX momentum into this area, then I will go for a bearish pullback. We break below the same level as yesterday, roughly this 30.50, which is this little support ledge and very key on the daily. Then I'm going to choppy bullish mode. If we break it with momentum, I'm going into bullish mode for a continued push up to those levels. Let me jump around to some other markets. Notes, trading against the prior support becoming resistance. There's really nothing. We're in consolidation right now. We'll watch for minor momentum above 111.01 or breakdown below 118.50. If we start rallying above this of 111.01, that should be continued support for a continued push higher in the short term in the markets. And when I mean markets, I'm talking S&P, NASDAQ, Dow, etc., etc. We start breaking below 110.17, we'll more aggressively be watching for the pullback. So I'm using these other markets as confirming indicators since we're getting to that topping area. Let me jump to the dollar index also. Dollar index is starting to get a little more pausey right here. So I am watching the downside pullback is waning. So is this a potential double? It's a little sloppy because this flag pattern right before it, but I will be keeping an eye on it. At this point, I have to use the more aggressive targets. So above 112, roughly 112.20. If we start rallying up here, that will be, again, more confirmation that the dollar is rotating back up. And I will start looking for the more substantial pullbacks in the market. We start breaking below this 111.50. We'll be watching for the continued pullback on the shorter term the continued pullback in the dollar and the continued rally. The key area I'm focused on in the short term is 111.31 on a daily closing basis, and that will be my intraday support should we break the already established daily low. Let me jump to the spiders. Again, you're going to have the gap up with the spiders because of the future strength. Key resistance now, and not just for today, is roughly 378. Then the 50, 381.75. And the prior breakdown zone up there. Besides the gap, we're at 374 right now. So we have key support coming in about 373.60. On any pullback, that is very key. Besides using the short-term gap harmonics, just going into the open, if we have some weakness in the open, 373.40 is my key support. We start breaking down there, I'm going to be using my gap harmonics, but then major support coming back at 370.26, even before the breakdown area. And if you're looking at the harmonics to the upside, target area to complete at least the move above the 62.5 is 375.54 at a minimum. And then using the confirmed pausing bar harmonics, you're going to be using 375.80. So this is your target area to move up stops at least or take partial profits on the spiders. Also, you have the key gap open at that level back from Thursday the 6th. So would not ignore that level for any rally. The Qs. The gap, again, above because of the futures, and that's why I'll be keying off of those overnight. But key support, we're at 275.70. Key support, 275. All right, 275. Now targets, were 276.72 is my first upside target. We still have a gap left behind. Do not ignore this gap open price, though, of 278.28. Then the target is roughly before the 87.5. I would be utilizing 279.76. And those targets can be, again, for profits and or stop raises. And then the 87.5 is 280.44. I will also short-term be putting on the gap harmonics. Now let's loop back around. Peeking in on the Dow. The Dow, which looks, unless we get some major selling pressure, we've already tagged that 50. Breakdown zone on the daily chart, a little, almost tagging that. Gonna watch for a little minor resistance. That's why I'm keying off the opening tick. And to watch that VIX very closely and the dollar index once the market's opening. Key support now back at 30,500 roughly. It looks, if we do close above this level, we have the probabilities for a continuing run higher in the Dow. The next target would be 31,242. This is only on the daily close. Other than that, now if we do rally strong intraday, I will use that target, 31,242, which would be substantially higher. So that's where we sit right now. So that's what I will be watching on the Dow. Really don't like when they trigger with cycles at the top. That's why I'd be watching for a pullback for an entry. Now, a trigger does not have to be an entry, remember, because of reward to risk. You can watch for pullbacks on entries. The Russell tagging the 50 and the highs from the June 4th of October. This is real key also. This double still is in play. It would have to be on a daily close above 1782.50. And that would also be a close above the 50. You're also against a pretty substantial double area of breakdown zones. So I'm, again, paying close attention to where this closes today on the Russell. If you want to use minor targets, this is a really good area. Should it break through on the open to use your minor target, my minor target, 1799.8, so 1800. And that also comes in line right with this little pausing breakdown zone. The pullback areas, by the way, 40 Russell, I'd be focusing if we do get the slightly bigger pullback, besides using that 1 hour rotation zone, but you start falling back below 1763, 1753. Remember, if you're trading the Russell, watch the Russell futures, but you can always be using this information with the IWM. The Russell futures are much stronger than the IWM for patterns, though. Please keep that in mind. That's why I stress people watch the futures, even if you don't trade them. Key major, if you're trading the IWM, 176.07. We do get through there. We do get through there because that's also the 50 and a major breakdown zone. So there's major overhead resistance on any rally to this 176.07. Would not ignore that as a target area. Please do not ignore that. DAX looks like it's probably, unless you get some major selling, going to come in and trigger this double. So again, we have probabilities, not guarantees. We could see if a couple of these doubles trigger, we could see some follow through, especially after a minor pullback, because weekly cycles are still heading up. Key resistance also, yes, I know we filled this gap before, but I'm still watching that because this was key resistance before, right, with the mini gap fill. 12,970. Then 13,076. So, and again, everybody's popped on like Legion. Good morning. Good afternoon, Eric. Good morning, Connor. Don't know if this statement that keeps coming up in bank conference calls as they beat earnings is a positive. Well, consumers aren't tapped out yet, but they're using credit lines. Long term, I don't think that's a positive. Short term, it's going to still give. The consumer hasn't rolled over yet. It's why also from that aspect, you can have inflation still getting passed on easily to the consumer because they're not tapping out yet. I think it's going to change dramatically with spending into the holiday season, but we shall see. It doesn't matter what I think. I got to trade the probabilities. There's no, this is not MJS 1 ES 1 hour sloppy double top. It's really Really yucky here. Don't die on me now. No, it's beyond it. No double. Again, so there's no major reversal pattern. There are some waning momentum. What does that mean? If we have some weaker internals, I'm watching for some choppy to pullback areas, but nothing. Unless we start getting momentum to the downside, get the dollar rocketing, the notes rolling over. I'm not talking the yield, I'm talking the note futures rolling over, and the VIX breaking and triggering that minor double. I cannot be overly aggressive to the downside because especially we haven't hit the probability to the upside yet. The market's way overbought in the it's getting overbought in the short term, but not in the long term yet. And remember, we were way oversold for a long time. So, are we way overbought? Not yet. This got way overbought back in August on this final push higher. Are we way overbought yet? No. Can we get a pause? Yes. Have we completed the target areas yet? No. And by the way, I still wouldn't be surprised to easily see. Oh, just wanted to point out one more thing. We have reconnected with the weekly rotation zone again. Now, from the bigger perspective, anywhere, as I touched on, anywhere between here, slightly higher being here because that 37.80.25, up to 39.26, I will be watching for more significant topping patterns. Weekly cycles still aren't at a top. So even if we get that pause more on the daily, I'm watching. Weekly cycles to get to the top, daily cycles to roll back down and then get to a top again. Then I'll be watching for a much more significant top area. Yes, agreed with Christoph. Don't forget to like the video. Oh, it's so funny, all the back and forth. What do you think about the probability of the S&P 500 connecting with the monthly 200 SMA within the next 5 years? You want a 5-year forecast? I think you want my real thing. I think we may, on a longer term view, I think next year we will connect with the No, can't say that yet. I think 5 years, I could see that. I could actually see a little quicker than that. Yeah, I think we could do it. Especially if we don't go into a major bull market again and go back into more of a choppy, larger range trading market, and we have some global shakeups, we could see that in the next 5 years. Would not be using that as a target just yet. Also remember, yes, they're raising. That's been baked. That 75 is baked in. It's going to be more so the guidance now in December if it's a 75. Also, don't discount something. Please don't discount something. October 28th, a lot of the big boys can start the stock buyback programs again that have been on pause. So don't discount that even if we get this October pullback again after hitting some of these key levels the upside, unless we really break below this 3,600, we could see some more upwards pressure in November with buyback programs from the big boys. There's lots of buyback programs still out there. It's very interesting. Let's see. U.S. manufacturing output, month-over-month actual 0.4, forecast 0.2. Thank you for reminding me. Going into the open. See, I'm way behind on comments. Yeah, zero point 0.4. Capacity utilization actually up. These aren't bearish numbers. They aren't bearish numbers. So nothing bearish coming out with those numbers. Let's just keep an eye on the open. Now, unless we start getting a pretty weak market internals, you do have a little potential mini 5-minute double against a pretty strong market up. I will, if we have, let's see, very strong. Wow, that's a pretty much a buy. So again, I'm watching the zero, the zero level on any pullback, but that's some major buying pressure going into the open. So there is nothing. I would be the 5-minute double when I see stuff like this would only be utilized for, based off my testing, only be utilized as pullback levels. Unless we really broke down with the tick, would not be shorting into this. So I would be using these levels, especially this 37.53 to 37.52 as a pullback level. VIX. There's nothing bearish yet with the VIX. All right. Let me just check out the NASDAQ. We hit that 75. So NASDAQ, next target area. NASDAQ so far strong. No potential double in the NASDAQ. 11,445. So that's where we sit. I'm going to jump. Oh, Tesla. Huge gap up. I'm watching this go, but you got the juice going in. We do have that still potential double. Let me just put on the gap harmonics with this. Again, these are short. I'd be watching short-term pullback area is 224.62 to 223.33 before I'd even consider targeting that gap fill. Especially with NASDAQ strong, that S&P marching up higher.